All right, so we've got a really interesting set of documents here on Gravita India.
Yeah, definitely an interesting company.
Really seems like they're doing well too.
Yeah, for sure. I mean, just look at their last quarter. 27% profit jump.
They're on this huge expansion spree.
Really seems like they're positioned well to kind of ride this wave of, global sustainability.
Yeah, they're definitely proving that you can do good for the planet and make money at the same time.
Exactly.
So, for starters, they're trying to expand their capacity to over 500,000 metric tons a year by 2027.
That's pretty ambitious.
But here's the really interesting part. They're not just doing more of the same, they're branching out.
Yeah, into some really interesting new sectors.
Recycling sectors like lithium-ion batteries from electric vehicles, steel, paper, even rubber.
Yeah, and that's where this recent acquisition they made in Romania comes in.
Their first foray into Europe.
Exactly. It's a rubber recycling plant, and it just seems like, a big move for them.
Yeah, for sure. And they're thinking even bigger than that. They're trying to raise like over $120 million US to just keep acquiring and expanding.
So a lot of growth on horizon, it seems.
Yeah, I think they're trying to set themselves up to be like a global recycling powerhouse.
Well, they're already operating in over 70 countries, so I'd say they're well on their way.
For sure. But what I find really interesting is that all this is happening at the same time as some big policy changes in India.
Definitely some interesting changes in
As are
India.
kind of shaking up the whole recycling industry there. So what's going on? What are we talking about? And why is it such a big deal for Gravita?
Well, India has introduced some pretty major regulations. We're talking new battery waste management rules and also extended producer responsibility regulations.
So what does that mean in plain English?
Basically, it shifts the responsibility for managing waste from the people buying it to the companies that make it.
So instead of just chucking our old batteries in the trash, there's now a system to make sure they're recycled the right way.
Yeah, exactly. In the past, a lot of that happened in the informal sector, which wasn't always the best for the environment, to be honest. But these regulations are forcing companies to move towards a more organized and sustainable approach to recycling.
So basically, Gravita already does things the right way, so these regulations are a good thing for them.
Absolutely. It allows them to capitalize on the situation, get more scrap domestically, better for business, and better for the environment.
That makes sense. Are there any other big changes happening in India that are affecting Gravita's business?
Oh, yeah. There's another key part of these new regulations called the reverse charge mechanism.
Okay, that sounds kind of complicated. Can you break it down for us?
Well, imagine you have this small scrap dealer who maybe hasn't been paying all their taxes. This new rule shifts the responsibility for paying that 18% tax from the seller to the buyer.
So the bigger companies are now on the hook for making sure the tax gets paid, even if they're buying from these smaller, less formal operators.
Exactly. And that really incentivizes those small players to either become tax compliant, formalize their operations, or risk getting cut out of the market.
Because the big guys aren't going to want to deal with them if they're not following the rule.
Exactly. It's a clever way to level the playing field, encourage everyone to operate more transparently and more responsibly. And Gravita, they're already doing that, so they're well positioned to benefit.
So it sounds like they're not just adapting to the new rules, they're actually helping to shape the future of recycling in India. It's like they're in the perfect position. A company with a commitment to sustainability, this global expansion strategy, and a government that's pushing the entire industry towards a more responsible model. It's no wonder they're doing so well financially.
Let's talk about their financial performance for a minute. Just in the first half of this fiscal year, their revenue went up by 19%. Their EBITDA, or their earnings before interest, taxes, depreciation, and amortization, jumped 30%.
So their profitability is really increasing.
Yeah, and their profits are up even more, 27%.
That's huge. What's driving all this growth?
Well, there's a couple things happening. First, they're really good at what's called arbitrage in the global scrap market.
Like taking advantage of price differences between different regions.
Yeah. So if they can find scrap cheaper in, let's say, Southeast Asia than in Europe, they'll buy it there and sell it where the demand is higher.
Pretty clever. But that must expose them to a lot of risk with the price of these commodities always going up and down.
Well, that's where their hedging strategy comes in.
Okay, hedging. I hear that term thrown around a lot, but I'm not really sure what it means.
Basically, they're using financial tools to protect themselves from big swings in commodity prices.
So it's kind of like insurance for their profits?
Yeah, you could think of it that way.
So they're buying and selling scrap, but they're also playing a much more sophisticated game, using their expertise to navigate the complexities of the market.
That's a good way to put it. And that expertise is also evident in their focus on producing what's called value-added products. So instead of just selling, let's say, basic refined lead, they're creating specialized lead alloys that are tailored for specific industrial applications.
Okay, so they're not just a raw material supplier, they're moving up the value chain and getting higher prices.
Exactly. And it's working. Their goal is to generate more than half their revenue from these higher margin products by 2028.
This is starting to sound like a recipe for success. But let's be real, there have to be challenges. No business operates in a perfect world.
Of course, there are challenges. Commodity prices are always volatile, even with hedging. Sourcing enough good quality scrap to fuel their expansion is going to be an ongoing issue. But Gravita seems to be facing these challenges head on.
Okay, so how are they doing that?
Well, they've built a global sourcing network. They've got strategic partnerships to make sure they have a reliable supply of scrap. They're constantly looking for new markets and new opportunities.
So they're not just reacting, they're shaping their own destiny.
And what I really admire about them is they're doing all this with a deep commitment to sustainability. It's not just a PR stunt for them. They've laid out a very detailed ESG roadmap with environmental, social, and governance goals, and they're holding themselves accountable for actually achieving those goals.
Yeah, and investors are noticing that. More and more these days, companies that can show a real commitment to sustainability are getting rewarded.
Yeah, absolutely. Gravita gets it. Sustainability isn't just good for the planet, it's good for business. It helps their brand, it attracts investors, and it helps them win business from global companies that have their own sustainability targets to meet.
So we've got this really fascinating picture emerging. Gravita's growing like crazy. They're taking advantage of some really interesting regulatory changes in India. They're delivering impressive financial results, and they're doing it all while staying true to their commitment to sustainability. And what I find really intriguing is their potential to become a global leader in what's called the circular economy.
It's a really interesting idea. They're not just recycling materials. They're changing the way we think about waste, about managing resources.
To really understand their potential, though, we should take a deeper look at their financial performance, specifically their hedging strategy.
Yeah, let's dig into how that works and why it's so important for their success. So I bet you're wondering how this hedging thing actually works. In practice, they don't hedge all their production, just a portion.
Okay, so they're picking and choosing.
Yeah, more like 10–15%.
Okay, so how do they decide when to hedge and how much to hedge?
It's all about managing this time lag between buying the scrap and selling the finished product.
Okay.
Because remember, those commodity prices can change a lot during that time. So let's say they've got a big order for lead alloys, but they haven't bought all the scrap they need yet.
Okay.
So to protect themselves, in case the price of lead suddenly jumps up, they'll buy lead futures contracts.
Okay, so it's like they're locking in a price for the lead they're going to need later.
Exactly that way,
Yeah.
even if the market price goes up. They're safe. They've already got a good deal.
Right.
Now flip the scenario. Imagine they've already bought a bunch of scrap, but they haven't sold the finished product yet, and the price of lead drops.
Uh-oh.
That's where they would sell lead futures contracts.
Oh, so if the price of lead goes down, their losses on the actual scrap metal are balanced out by gains on those futures contracts.
Bingo. It's like a safety net.
It's really clever.
It helps them smooth things out. It shows a more predictable profit margin. And as we saw in Gravita's recent results, it can really pay off.
Yeah, they reported something like $4.5 million in gains from hedging just last quarter.
Yeah, but it's not always consistent.
Yeah.
It really depends on how much those market prices fluctuate.
Right, if lead prices are stable, they're not going to see those big gains.
Exactly. But when those prices start going crazy up and down, that's when the hedging strategy really proves its worth.
It's like they're surfing those waves of the commodity market.
Love that analogy. They're using their knowledge, their experience to navigate all the uncertainties of this business. But we've talked a lot about the numbers. Right. What about the human side of things? Their commitment to sustainability, is it all just about checking boxes?
Well, it's easy to be cynical, but everything I've read suggests they're actually walking the walk. Their ESG roadmap lays out very specific goals.
Yeah, for reducing their environmental footprint, improving working conditions, promoting ethical practices all across their supply chain.
So it's not just lip service, it's the real deal.
Yeah, and they're backing it up with real action. They're investing in renewable energy, water conservation, eliminating hazardous materials.
It all ties together their circular economy model, minimizing waste, reusing resources, all that goes hand in hand with environmental responsibility.
Exactly. And that approach isn't just good for the planet. It makes good business sense.
Right. It boosts their brand, it attracts investors, and it helps them win contracts with companies that have their own sustainability goals.
So they're hitting all the right notes: strong growth, smart financial management, and a deep commitment to sustainability. But we should also be realistic. Are there any potential risks or challenges they might face going forward?
No company's perfect, right?
For sure.
Yeah.
One of the big unknowns is commodity prices. Their hedging helps, but a prolonged drop in the price of lead or aluminum could still hurt.
Yeah, that makes sense. And what about the challenge of finding enough raw materials to keep up with those ambitious growth plans?
That's another big one. Competition for scrap metal
Hmm.
is heating up, especially with all these changes happening in India. They're going to need to use their global network, their partnerships, to make sure they have that steady supply.
It's like a balancing act, isn't it?
It is. And they're operating in so many different countries, each one with its own rules and regulations.
Right. How do they even keep up with all that?
Staying agile, being able to adapt is key. They got to be on top of all those changes in all those different markets.
Otherwise, they could run into some serious problems.
Exactly. What about internal challenges as they grow bigger? Could they stumble?
Well, nobody's perfect.
Right. There's something called execution risk.
Yeah.
They've got a lot of ambitious plans in motion, but integrating those new acquisitions, scaling up production, maintaining quality control while they're growing so fast.
That's a lot to juggle.
It is. And they can't forget about talent. Attracting and keeping good people in a competitive industry like this is really important.
Yeah, they've got to create a good work environment, invest in their employees, make sure they have the best people on board.
Couldn't agree more. We've covered a lot of ground: their expansion, their financials, their sustainability initiatives. But let's circle back to their recent earnings call.
Oh, yeah. They shared some interesting insights into their strategy and how these new regulations in India are playing out.
It's one thing to read about it in reports, but it's another to hear directly from the company.
So what stood out to you? What were the key takeaways?
Well, one thing was clear. Gravita is really focused on taking advantage of the opportunities created by these new waste management regulations in India.
They seem to think it's a game changer for the industry.
Yeah, they see themselves as a leader in this new era of responsible recycling.
And it sounds like those regulations are already having a real impact. They talked about a big increase in the amount of scrap they're getting domestically.
Yeah, which is great for them. It means their supply chain is more stable, less reliant on imports.
Which can be really unpredictable.
Exactly. And they had some interesting things to say about that reverse charge mechanism, too.
Yeah, what was their take on that?
They think it's going to speed up the formalization of the recycling sector in India, make it harder for those informal players to compete.
So it's a win for Gravita.
Yeah, and it's a win for the industry as a whole. It creates a more stable, more predictable business environment, which is what they need to grow.
But their vision goes beyond India. They're making moves to expand globally, and that acquisition in Romania is a perfect example.
For sure. Why Romania, though? What was the thinking behind that?
Yeah, I was curious about that too.
Well, for one, it gives them access to the European Union, a big, sophisticated market with high environmental standards.
So they're going where their expertise in responsible recycling is a real asset.
And Romania is investing a lot in its own recycling infrastructure. So it's a market with a lot of potential. But what's really interesting is the move into rubber recycling.
Right. That's different from their core business.
It's a smart move.
Yeah.
The global market for recycled rubber is growing fast, driven by demand from all kinds of industries: tires, construction, automotive.
So they're diversifying.
Yeah, thinking ahead, positioning themselves to capitalize on these emerging trends.
Sounds like they've done the research.
They have, but they also talked about the challenges they face.
Mm-hmm.
Commodity prices are always a concern.
Yeah, even with hedging.
They emphasized how important their global sourcing networks and partnerships are for making sure they have enough scrap to keep growing.
It's a constant challenge.
It is. And they also talked about the importance of talent finding and keeping good people.
Yeah, that's a big one in any industry these days.
They really emphasize creating a good work environment, investing in their employees to attract the best and brightest.
Because ultimately, a company is only as good as its people.
Absolutely. And Gravitas seemed to understand that.
So we've looked at their expansion, their finances, their sustainability, and we've heard what they have to say. But I want to zoom out for a minute. How does Gravitas' story fit into the bigger picture of what's happening in the global recycling industry?
Great question. I think what we're seeing with Gravita is a microcosm of what's happening in the industry as a whole. This global shift towards more sustainable practices driven by consumers, by governments, by a growing awareness of how waste impacts the environment.
So recycling is going mainstream.
Exactly. And that's creating huge opportunities for companies that are innovative, adaptable, and committed to doing things the right way.
So it's not just luck, they're shaping their own success.
Yeah. And that's what makes their story so compelling. They're not just recycling materials, they're recycling our whole approach to resource management.
So we've learned a lot about Gravita, their impressive growth, their smart strategies, their commitment to sustainability. But before we wrap things up, I want to leave our listener with something to think about.
Always love a good thought-provoking question.
Given Gravita's aggressive expansion and the growing demand for recycled materials, could they become the world's leading circular economy champion? What challenges do you think they'll face along the way?
That's a great question, and only time will tell. But one thing's for sure, Gravita is a company to watch. They're showing the world that doing good for the planet can also be good for business.
And that's a lesson we can all learn from. So to our listener, we encourage you to keep learning about Gravita and the global recycling landscape. There's always more to discover. It's pretty amazing to see a company like Gravita showing that being sustainable and profitable can actually go together. But you know what really stood out to me from their earnings call? It was when they were talking about that reverse charge mechanism.
Yeah, they really seem to get how this is changing the whole recycling scene in India.
They said that the informal sector was basically exploiting this tax loophole, avoiding paying that 18% GST on scrap. But this new mechanism closes that loophole and makes the buyers, the big companies like Gravita, responsible.
It's such a small change on paper, but it's having this huge ripple effect across the industry.
Forcing those smaller, unregulated guys to either step up and formalize their operations or risk getting squeezed out.
Exactly. It's leveling the playing field, creating a system where everyone's accountable. And Gravita, they're already playing by the rules, so this really benefits them.
It's like they were ahead of the curve.
Definitely.
Yeah.
And it's good for the industry overall, pushing everyone towards more sustainable and ethical practices.
Speaking of pushing boundaries, let's talk about Gravita's global ambitions. That acquisition of the rubber recycling plant in Romania was a pretty bold move. What are your thoughts on that?
It's a smart move for a few reasons. First, it gets them into the European Union, which is a huge market, but also one with really strict environmental standards. And Gravita's expertise in responsible recycling gives them an edge there.
So they're not just expanding anywhere, they're targeting markets where their commitment to sustainability actually gives them a leg up.
Right. And Romania itself is putting a lot of resources into developing its recycling infrastructure, so it's a market with a lot of potential for growth. But what I find most interesting is the move into rubber recycling. It's a pretty big shift from their core business of lead and aluminum.
It seems like a really smart way to diversify. The demand for recycled rubber is going through the roof, with industries like tire manufacturing, construction, even automotive all needing more.
They're definitely thinking ahead, trying to position themselves to benefit from these new trends. They haven't given any specific financial projections for their rubber recycling operation yet, but they seem pretty confident that it's going to be a good investment.
So they've clearly done their homework, and they see this as a strategic way to tap into these new growth markets. It's really impressive how they're thinking about their future.
It all comes back to their vision of a circular economy. They're not just looking for ways to recycle stuff. They're trying to find ways to change whole industries by taking what used to be considered waste and turning it into something valuable.
It's inspiring to see a company like Gravita taking the lead in this global push towards sustainability. They're showing everyone that caring for the environment and making money aren't mutually exclusive. They can actually work together.
Totally. And it shows that the shift to a circular economy isn't just about government policies or new technologies. It's about changing how we think about the things we consume and the way we produce them.
Gravita's story is a great example of that change in action. They're putting their money where their mouth is, showing that sustainability can be a core part of a successful business strategy.
It's been a really fascinating look at Gravita India. They're definitely a company to watch. They're leading the way in an industry that's about to explode, and they're proving that doing the right thing for the planet can also be great for business.
I couldn't agree more. And to our listeners, we hope this deep dive has given you a new perspective on the power of the circular economy and the companies that are paving the way. Keep learning, keep asking questions. You never know, you might just discover the next big thing. Until next time, happy diving.